All right, guys. Enough about the presidential election. Let's talk about what's important, like following the money. And that's what Jerry Robinson does at FTM. He follows the money wherever it goes, into the darkest caves and caverns, into the underworld, into the universe. Jerry, why don't we really just, it's great to have you back. But here's my key question for you. You ready for it?
I'm so ready.
What aren't
I'm
you
ready.
long? What aren't you long?
The dollar. Unfortunately, I
Okay,
guess
all
I
right.
get
All right, good. You came up with something. All right.
yeah.
Anyway, Jerry, great to have you back. I know you're disciplined. That's why I asked you that. There aren't many bearish charts or sectors out there. It's
Not
like,
too many.
yeah,
Yeah, not too many. We were just talking about that yesterday, how back in the last chance we really had to get nice and bearish was
yeah,
back in 2022.
yeah.
And we, just real quick, there does seem to be a lot of chatter about us being near a top, and a lot of it having to do with the fact that the rate cuts tend to coincide with the economic slowdown,
Yeah.
and that therefore somehow that's going to lead to some sort of blow off top.
Recession.
Yeah,
Oh
of
yeah,
course,
yeah.
recession, and then some sort
Oh
of
yeah.
blow off
Melt
top
up
in the
to like
market, melt up.
what kind of numbers are you hearing? I mean, I've heard anywhere from 6,100, which I've heard for a while, up to 7,000 S&P.
Yeah, well, that aside, I mean, I think that's probably possible, but to me, that this looks like a classic. And you brought it up last time, and you nailed it. It it sounds like a recency bias issue, and let me just briefly explain because
Well, you
back
want to
in
share your screen so we have a
oh yeah
visual
yeah
at
you
the
bet, let
same
me do
time?
that. Well, they're
Yeah.
staring at you.
Okay. Yeah, recency bias for 10 years, right?
Right,
20 years.
exactly. It's
So
so
it's
true.
almost historical bias now that
That's
keeps
right.
being reinforced. Uh, why do you see some things that don't make sense to you?
Yeah, well, and
Like valuations or what?
well, I think some of the valuations are definitely stretched, but I think that the risk is that we end up in a situation where we fight the Fed. One of the biggest rules is don't fight the Fed.
Yeah.
And
Well,
right,
here's
and
why.
right, yeah, and as far as we see, right now where we stand, yeah, the economy is certainly slowing down somewhat. Some of the evidence can be seen in some of the consumer discretionary outlets. Even like I'm an investor in Lowe's, and so I'll go in often and I'll just check and say, "Hey, how's business going?" And over the last month or so, in Lowe's, it's been really, really slow, and a lot of it has to do with the interest rates, the mortgage rates that have just kind of stifled activity in the housing market. But the Fed is telegraphing that they're going to lower rates and that they're going to begin cutting rates not just this year but well into next year. And what I've seen over and over, Dale, and you probably have too over the years, is that and the reason I speak like this is because I'm coaching. I'm coaching and mentoring traders, and sometimes you gotta slow them down, and you got to say, look, don't end up fighting the Fed. Back in 2022, it was so obvious the market was going to go down. I mean, the dollar was going up, inflation was going up, rates were going up. It was very clear there was going to be a lot of pressures upon equities. And so, in a year like 2022, the best thing you could have done is you could have either A, been short, or B, if you don't like to be short, you could have been taking advantage of the opportunity by picking up great quality, high quality companies as they got trashed, kind of like Nvidia. That was our strategy in 2022. Nvidia had been left for dead. We said, hey, let's accumulate Nvidia in 2022. This is a perfect time to do it when everybody hates it. It was one of the rare times that you actually had Nvidia on the monthly chart below its 50 RSI. Well, that's a gift typically on that chart. Well, anyway, as we go now into 2024, we have the Fed telegraphing that the market is, that they're going to cut rates. And so what this means is it's the exact opposite. It's going to put pressure on the dollar, as we see here on the chart. The dollar has been resilient despite the expectation of rate cuts. And we've finally begun to see the dollar, concede some of those gains, and that it had all pretty much all year long. So we're back down in that 100 to 101 support level area.
Okay, that's good reporting. What do
Yeah.
we do from here?
Yeah.
You
Well,
know, yeah, I
this,
mean,
this, yeah.
to me, I said the dollar had spoken. I've been talking about a bear market in the dollar for about 3 months now.
Mm-hmm. Mm-hmm.
So, to me, and this was a target zone at par 50. Par 50 is going to, people won't be able to say the dollar's neutral anymore when we take that support out.
That's
Do you,
exactly, that's
do you
right.
think that's going to happen?
I do. Yeah, and in fact, let me show you. There's two major. Well, there's one major chart I'll show you here on the dollar, and it's a kind of an arbitrary number, but one of the things I learned early on was that you could find those what I call, and please forgive the language, but it's like a magic moving average. You can go back and if you spend time with the data, you'll start messing around with different moving averages, and you might find one that adapts pretty well to the price of different assets. One of the ones that I really like to use on the dollar on a monthly chart is the 36 monthly moving average. And that
Okay,
one,
yeah,
and that was we actually the last time we broke out or interacted with that was back in 2021. This began, of course, the
yeah.
big rally. Well, we came down and held that quite a bit, but we just violated it on the monthly candle in August, and so it looks like we're going to close below it. So that signals to me that we're definitely losing steam finally on the dollar. And
We're
then
going
this,
back. If you go back to that chart, Jerry, I have
yeah,
longer term objectives right at your, 90 level.
yeah, that you're right, exactly. And that looks like this particular chart here, where the 93.50 level is where I would envision the dollar eventually gets back to. That's not
Okay,
that
that's
that's
nice.
not that's not an unusual area, but that'll provide a lot of lift for equities. It'll provide a lot of lift for gold and silver and some of those other assets as it gently comes down. I expect it to be a gentle decline, two steps down, one step up on the way
Oh,
down, maybe.
yeah,
But
no crash. No, so
no, I hope not.
a controlled descent.
Yeah, yeah, I hope so. I mean, that's what I would prefer for the dollar. But coming back down to about 93 or so, I can see it in that range. Maybe even getting down below that area a little bit. That'll put us. We haven't been oversold, on the dollar since I guess since 2020, as we can see here on the chart.
Yeah,
But so the dollar is one thing we're definitely looking at. We're very, very glad to see that the market is understanding that those rate cuts really are coming, and you can tell from this dollar that we've really lost a lot of that steam as the recognition kind of comes in. The same thing in bonds. When you look in bonds, we certainly have seen rates come down, but
yeah.
you haven't really seen the flow into those some of those. Although fixed income has seen quite a few inflows, but we just haven't seen the kind of flows that I think we will see. There's a lot of money on the sidelines still earning 4 or 5%, and as those rates come down, we see that as a net benefit. The net beneficiaries will be utility stocks, real estate stocks, uh, and several other areas.
All right, so let me ask you a bit about that because um, they're defensive. There's
Yeah.
been a big rotation into staples, utilities, rate
Hmm.
plays. The XLF is making new all-time highs. Well, no, not new all-time highs, but making new 52-week highs.
Yeah.
Does that tell you anything about you know, uh, the fact that people are buying gold and bonds,
Yeah.
and selling the dollar is kind of like a recession? They're saying one thing, and the market saying another thing.
Well, the way I look at it is uh, a lot of the selling pressure that we saw that happened occurred in 2022, and that was due to savvy people just saying, "Look, I'm just in the market when it goes up. I don't want to be in here now." And so there was a lot of people who just skittish money that left. You also had money that just said, "Look, I don't want this. I can get higher interest rates." So a lot of the money moved out in 2022, and a
Right,
lot of that is still sitting on the sidelines. And when that money comes back in, that money was already skittish to begin with. So it wants utilities. It wants, it's there for the
right.
income. So there's a lot of income seekers that are going to come out of the banks as rates come down and they're going to go into the markets. And real estate is one of the best sectors, in my opinion, for those who are looking for opportunities. It's been beaten down so much, incredibly, and as well as utilities, which are enjoying that AI boom premium because they're in such demand. I I also think Bitcoin is just about to break out. I know that it's been kind of strange watching Bitcoin here interact with its 200-day moving average, especially in the wake of the halving. Typically, you would think that the market would be rallying by now and that we would have some sort of, breakout to the upside.
Mm,
Uh, I
not
I
sure.
have a I have a chart I'm looking here for. Let me see if I can find it. It's a Bitcoin halving chart history, and let me see here. Here it is. I think this is it. Uh, there it is. Okay. So can we talk about Bitcoin for a second, Dale?
Sure. Yeah.
Because I'm sure your folks, many of them are probably looking at Bitcoin as well. One of the things that we were looking at with Bitcoin is say, after the halving, how long does it take for that thing to take off? We know that in the post-halving era that Bitcoin goes up. But just a few data points from this chart that I had made a while back. We've been using this chart here for years, but we recently updated it with the fourth halving. And as you can see, on every one of these last several halvings, it takes 18 months to get to the peak from the month of the halving. And so the second halving on this chart here, as you can see, was back in July of 2016. And that month, was a down month for Bitcoin. This is a monthly chart. All the candles are months. And so that was a down month. The halving in 2020 of May was also a red candle. So it was a down month, that halving. And then when we look at the fourth halving, which was back in April, that was a down month. So typically the halving months are down months. Then when you look at the remainder of the candles and say, well, what else can we extrapolate from this? When does this thing typically begin to move? Well, we see the second halving here. We got one, two, three, four, five candles where we're or they're very small. By month six, you've got to break out a pretty big candle there on the move. So it seems by month six on the first halving. How about the second one? First one's down. Second one's pretty nice move, but it just really kind of hangs out. It finally begins to break out. One, two, three, four, five. One, two, three, four. On month five. By month six, you're on the go. Now we look at where we're at today in 2024. Say the halving happened in April. Well, that was a down month like all the others. But what about the following months? We got one, two, three, four, five. So we've had five where we've gone sideways. We got lower wicks here that were rejecting those lower prices. So what that tells me on Bitcoin, for those who follow that market like we do, is that using the pattern here, if the pattern holds, then by month six, we should be clearly on the move. And what I mean by that is by month six from the halving, we should
Right.
be we should be at a place where we're at a new
Advancing.
new high. Yeah, we
Yeah.
should be at a new high. So in other words, my forecast on that would be based upon this pattern that
Interesting.
over the next
Never
60
seen that
days.
before. Yeah.
Yeah,
I like that.
yeah, no. Over the next 60 days, we'll see a new high on Bitcoin just based upon that. And then the other thing I want to show your folks, this can be applied to any chart. And I know many of you guys use technical indicators out there, but just that monthly RSI on the monthly candle, study that monthly RSI on your charts. Whenever you look at a chart, look at the monthly view and then put that RSI on and just see where that RSI tends to peak on the rallies. And you'll notice on Bitcoin, the rally tends to take us up to about 90 to 95. That's usually where a really strong asset will
Yeah.
resolve on the monthly RSI before it ends. And as you can see here where we're at now, we're at 61 on the
Yeah.
RSI. So we have plenty of room to the upside. I'm not bearish at all on Bitcoin here, very bullish. And those are some of my reasons. So anyway,
Okay. Interesting. So, bullish Bitcoin, you have been for a while, Jerry. Bullish
yeah,
metals, bullish the market. Um,
bullish on
what about
NVIDIA.
bullish Nvidia? Okay,
Yeah.
last night's low was important. How about oil? Where are you at on oil?
Oil has been holding really tight in some areas that we like. In fact, I got a chart here that I'll show on oil. Sorry for the headache there from all the scrolling.
What beautiful
Okay,
charts.
Oh, yeah.
Really
Thank you very.
nice looking work.
Thank you so much. I appreciate that. That means a lot from you, brother. So West Texas Intermediate, we look for a level of around 75. We kind of consider that to be a now many of the producers out there, from my understanding, this may be wrong all the way across, but just a general understanding is that many of the producers out there need $55 oil to be profitable, and so uh, 75 is usually plenty of margin for things to be healthy in the energy market, but at the same time not be outrageous for consumers. So I like where West Texas currently is. I don't have any projection. It looks like it's just been kind of tightening
Yeah, it's
in a
like a
tri
coil.
triangle. Yeah, you kind of see that
Yeah.
triangle going on. Same thing with Brent. We look for that 70 to $85 range.
So basically, you're neutral until we get a resolution of
Neutral.
the triangle, and then
Yeah,
you'll
yeah,
get on it. I know how you are.
exactly.
I
Right.
know. Mike. You know the number one rule in the business when you were came into the as a broker, know your customer.
No, you're exactly.
I know my customers, Jerry.
That's right.
All
So
right. So silver still looks great.
we think silver's fine. Just we had that nice monthly breakout back around the $25 level back
Yeah.
earlier this year. That was the big triangle we were waiting for, and that had been for years in the making. And we got that nice breakout on the biggest volume we'd seen in years. So we knew, hey, this really means something. And also, let's see, on silver, the $29 range has been pretty key. We got that rising 200 weekly moving average down to about 24. I don't suspect we're going to come down that far. And I think as there does seem to be a lot of gloom. It could be the election season that we're in. That could be adding to the gloom. There's obviously inflation pressures that are coming down. There's that recency bias that remembers many of those issues, which is also hampering. When I look at the state of the economy and I see the complaints from the average uh, American, it's difficult to know what the source of it is, whether it's some sort of uh, belief that the economy is bad, and so therefore they say that it's bad, or if they really are. And I know many people are feeling this economy. Don't get me wrong. I know that it's been very tough, but in reality, we have so many metrics that indicate to us that if you're investing in this market, if you are being smart, if you're buying the S&P 500 in your 401k, if you're just buying basic assets, if you're buying real estate, if you've been doing that over the last several years, this economy is actually pretty darn good for you.
Yeah, but
Whereas,
that's like 10, that's 10%.
yeah, if you don't own assets, which is sadly, the majority of
Right. So
folks,
it's easy to understand
it's
how.
tough. It is easy to understand where they're coming from on that.
Yeah, because
But
they're savers instead of investors if they save, and they've been squeezed on everything they pay for.
they have and they haven't been taught how to invest. We have very poor financial education, and so they haven't been taught the importance of it. There's a in fact, when you get on social media, Dale, you know this, you see a lot of sarcasm, you see a lot of cynicism, even around investing. Like even the things that can help. You see that many of the exit doors have been kind of closed and locked, and kind of, and so the point is that the reason I say all that is that as we look at where we're at now with this political situation, there's a lot of angst. I suspect that many of the things we're facing are largely temporal. The rate rotation, that's temporal. The unwinding of the yen carry trade, that's temporal. The Some of the other things that we've been seeing in terms of the growth scare, well, that's kind of temporal. And so hopefully we're moving through some temporal things and we're going to resolve to the upside. When I saw NVIDIA earnings yesterday, uh, I knew that this thing is nowhere near over as far as the rally in terms of the AI boom. You and I, Dale, haven't seen the best app that comes out of NVIDIA chips. NVIDIA hasn't released its best chip. we're still years and years and years away from all the advances that we're going to see. So when I look at some of the opportunities here, I just see I see abundant opportunities for those who are wise and diversified. Maybe I'll say this too, is that when it comes to stocks and those listening out there, stocks are just one aspect of a financial plan. So you don't have to swear stocks off or say stocks are great. You can just have a little portion of your money in stocks and a little portion of your money in bonds and a little portion of your money in gold, a little portion of your money in real estate, a little bit in Bitcoin. And that way you stay nimble in the event that the rules of the game change. And the rules of the game are set by the IRS. And they change the rules. So if you get all piled up in gold and they change the rules, well, that's no fun. And if you get all, piled into real estate and they change the rules, well, that's no fun either. So the best advice I give to our members and folks is that in this environment, especially if you're skittish about what's in the future, just, cast your bread upon the water 6, 7 different ways and, learn to diversify and, um, but don't swear off entire asset classes, without knowledge. And for some people, they shouldn't be in stocks, and for others, they probably should be. So
Are you a certified financial planner?
I
Because you
am.
talk like one.
Well, I became an advisor in 2008. I got my life insurance license in 2007, 2008. And I have we do refer out to financial advisors, but I absolutely love the financial planning strategies that we produce here at Follow the Money, and strongly believe that everybody needs a financial plan. Yeah, absolutely.
Arnie is saying, how about swearing off NFTs? Look what
Sure.
happened there.
I'm okay with that. I think it's okay to swear off NFTs.
Oh, okay. All right. And so, Jared, why don't you show the people and a lot stuck around for you've been pretty good about this diversification and pretty bullish most things. Uh, the dollar is probably the newest event since our last conversation.
I
You
think
were,
so.
yeah, you were constructive everything last time, and the dollar wasn't. I don't think you were sure about it. A lot of people weren't, but now you are.
We were pretty sure that it wasn't going to go above 106 to 108.
Okay.
That was our main point.
Yes, all the interviews are recorded, Arnie. Okay. So go ahead, Jerry. Show people where they could find followthemoney.com and what kind of model you have for them to get involved with you. And I think that your demeanor and what you said today um, makes a lot of sense, and that people should do it um, because that was something, I may be a good trader, but I wasn't the greatest financial planner.
Mm,
So if you think about if I had it to do over, especially people out there that are younger, and it's never too late to start, but to have that plan and not just think you're going to hit home runs in the
mm.
markets all the time,
Well, that'll preach.
and not plan for when you're, later,
Yeah,
make
so
plans for
true.
later.
So true.
Because later comes,
Yes, it
I'm
does.
witness to it. Okay.
You you will meet your future self. You will meet your future self at some point, and you want to bring a bag of money when you show up, and the thing is
Here,
you know what I mean? Uh,
here's later.
right.
Okay. You want anyway, so really important for
It
people to
is.
do.
Whenever I first got started back in the mid 90s as a trader, I thought in terms only of trading. And so I didn't
Right.
think in terms of like, oh, I also need an investment plan. I mean, I didn't even think
Yeah.
about it. I thought suckers had investment plans. I was the smart guy. I was the trader.
Yeah.
It was later that I realized, wait a minute. I've got to have two hats. I've got to be an investor and a trader, and that was like a dawning moment. Oh,
Yeah.
it's like and so I remember that, and I realized, wow, I've got to tell more people this because when you learn to trade, you think, well, that's the way you encounter the
Amass
market all
wealth.
the time. Yeah, that's the
Yeah.
only way to do it.
Right.
And so
Right.
we got to combine investing and trading, and really quickly. I know we're out of time, but what we do is we teach that. We teach that here at followthemoney.com. You can come over to followthemoney.com. And when you do, you can become a member here, join the club. And when you do, you get access to all kinds of stuff. We give access to you to a daily swing trading idea we put out by email. We also, every night, we give you all the newest swing trading ideas, position trading ideas, long-term investing ideas. We have top trending stock lists, momentum stock lists. We have ETF leaderboards and crypto leaderboards to keep you posted on what's trending, because we do follow that money. As you well know, we have tons of courses here for you, whether you're a swing trader, position trader, long-term investor, crypto investor, options investor, whatever, or options trader, whatever it is. We have a software here that you can actually use for, it's a trend trading software. And so we've developed our own software here, Profit Tracker. And we just encourage folks, and we have a weekly webcast where we educate folks. I mean, there's just a ton behind the paywall you wouldn't imagine, but there's a lot of stuff for free too. So if you just come to followthemoney.com and just start kind of kicking around, you'll find free podcasts, free videos, free resources, downloads, PDFs. We're here to educate. And every opportunity we have to come on ForexAnalytix with you, Dale, is an opportunity for us just to share some about the markets, but also to let people know that if they want, the more education, that's what we love to do. That's what we've been doing since 2010, and we just love the opportunity to serve folks and help them kind of turn the light bulb on and kind of see and make plans for the future and seize it with some confidence.
Okay, Jerry. Well, it's a skill that I urge people to learn how to do both. And if you can't do both, you can find someone to help you with the other. But just because you can't doesn't mean you don't need it. Okay, so thank you, Jerry. Thank you, brother. My
My,
trading warrior brother, Jerry Robinson, everybody.
my pleasure.
Uh,
Thank you.
yeah, Jerry, we'll talk after the election.
That sounds great. Look forward to it.
And appreciate you coming here and sharing your work with us for it's been a few years now. Thank you very much.
Thank you so much. Appreciate the opportunity.
Okay, follow the money. What there are other things to follow, but in this world, on the world, in the world, follow the money. Also, follow your heart. And I won't say it. All right, follow God. And I'll see you guys later. Have a great rest of the day. We'll wrap it up for TGIF, and I'll see everyone tomorrow. Don't just count your pips and Bitcoin and shares and silver and everything that's going up. The whole world is going up. Just be long the world. When the dollar's bad, you could be long the world. We'll see how long it lasts. Always be ready for anything and everything. Adios, everyone. Thanks again, Jer.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.